This is The Weekly on ClickOrlando.com with Justin Warmoth.
Good morning, I'm Justin Warmoth. Record-breaking gas prices are not slowing down Memorial Day weekend travel, and that demand is part of the reason why analysts say prices will continue to climb. This morning, GasBuddy's Patrick De Haan is here to give us his summer forecast and when drivers could finally see some relief. Patrick, thanks so much for joining us this morning.
Thanks for having me.
Absolutely. All right, let's talk about it. On the minds of so many, especially this weekend as folks hit the road for Memorial Day. What's driving prices at the pump? Is this a supply and demand issue?
Absolutely. Continues to be a supply and demand issue. We saw prices going down in early April, but then the European Union came out and said we're really close to sanctioning Russian oil. That kind of started the jump in prices. Now, in the backdrop, we've also seen gasoline supplies declining almost on a weekly basis ahead of Memorial Day. And that's caused gasoline prices to go up. And the same is held true for diesel, which you've probably seen explode over the last month and a half. All of this is really happening because we've lost about 1 million barrels a day of refining capacity. So that's going to keep prices fairly elevated, not just for Memorial Day, but I'm afraid through the summer. And of course, with hurricane season just ahead of us, things could get worse.
Why are levels so low? The lowest really since 2019, right?
Yeah, we're in terms of gasoline and diesel inventories, like I said, the loss of about 1 million barrels a day of refining capacity is really to blame. Some of that happened because of COVID, reducing demand. But last year, a refinery in Louisiana shut down after Hurricane Ida damaged it tremendously. Back in 2019, a fire at a refinery in Philadelphia closed it permanently. And keep in mind, this isn't just a U.S. trend. We've seen a lot of refineries in Europe also shut down over the last 3 years. So this is a global issue, and that's why things are extremely tight and not likely to get better anytime soon.
And then in the meantime, on the demand side, that has been so high. If you drive around, you see it. Are we seeing, or are you seeing really, based on the numbers, are we seeing demand diminish at all after we break records seemingly every day?
Well, I mean, demand is very strong. But it's certainly not quite as strong as it was in 2019. I think that's where the obvious massive difference in price is weighing on Americans. Now, keep in mind that the conditions this summer are the most favorable probably since 2019, right? The economy is finally basically fully reopened, and Americans are sick and tired of sitting home for the summer. And so unlike last year where it was kind of like half and half, this summer, many things are fully reopened. And so, another year is not going to be lost. And that's why I think even in light of high gas prices, 58% of Americans said that they're hitting the road this summer. That's up from last year and a sign of resilience against these high prices.
And Orlando and Central Florida, certainly a hot spot, whether you want to stay here and staycation, if you will. You're still going to drive maybe to the beach, to a lake, whatever. But we're going to have folks coming down as well. How does Orlando stack up when it comes to gas prices when we look at the rest of the nation?
Well, at least today, Orlando is still a little bit under that national average. National average today, $4.60 a gallon. Prices in Orlando at about $4.58. We did see most stations jump up early this week to $4.59. So just a sliver under the national average. And that's usually the way it is. Orlando is kind of one of those areas that can be under and a little bit over. But I think the bad news is not just the high prices to start the summer, but that we may be stuck with these high prices for some time. And everyone knows, especially Floridians, hurricane season is just upon us, and that certainly can cause shutdowns and issues as well. So I expect it to be a volatile and expensive summer for filling your tank.
You know, I spoke to you in February with the headline, could gas prices reach $4 a gallon? GasBuddy analyst weighs in. Well, you predicted that would happen, especially if Russia invaded Ukraine, and that is what happened. Now they're around $4.60 a gallon. JP Morgan comes out with their own prediction saying $6 national average is what they're predicting. Is that how you see it?
It's not impossible. I would put a little bit of cold water on that, though. I certainly myself don't see it. I think there would be a lot of stars that would have to align to get us to that $6 mark. Demand would have to be even more resilient in the face of prices that they predict could go up over another $1.50 a gallon. And I just don't see quite all of that happening. Now, like I said, it's not impossible, but personally, I don't think that's the trajectory we'll see. Now, if demand continues to be elevated, if we get a perfect storm like a Hurricane Harvey that sits on Houston, on the nation's refining capital, then we could see it. But given the extremely long odds, I don't think that's going to be a norm in the summer, unless, of course, you're in California where it's already $6.20 in some areas. I don't think that's going to happen in Florida, but there's still a remote chance it could.
$5, is that inevitable?
I think that's, much more probable than $6. I think all it would take is a smaller refinery issue to get us to that $5 mark, where a smaller hurricane could get us there. There's a lot of things that could get us to 5. There's not a lot of things that could get us to 6. We'll just put it that way.
I'm curious because we've heard the Biden administration continue to blame high gas prices on the Russian invasion of Ukraine. And that is certainly, as you've touched on, a piece of this. Is that the only thing? Because it seems like that's the pushback from Republicans, certainly, but others saying, well, it's not just that. That's not the only thing that we need to blame here. Is there something that the president can do on top of that? Any more levers he can pull?
Not a whole lot of levers. A president doesn't have a whole lot of levers to begin with. And, I'll just say this, that if President Trump had won a second term, prices would have absolutely gone up as well. Maybe not to this exact same level of, 458. But, if the same things had happened, it wouldn't have mattered who was in the White House, because they really have no power over the situation. So, President Biden's already released oil from the SPR. He's done some other things that are notable, but you can't offset Russia, one of the world's largest oil producers. There's no spare Russia waiting to jump in and produce oil, and that's the problem. And there's no way a president can suddenly just tap 10 million barrels a day of oil production. We've tapped 1 million, right? That's the president released 1 million barrels a day, but that's still 1/10 of what Russia is capable of.
And then we've heard also politicians calling for ramping up production. That doesn't have an immediate effect, certainly, right?
Yeah, it does take quite some time for new drilling and new sources of oil to make it to the market. Several years, in fact. Now, there were a lot of DUCs, or drilled but uncompleted wells, as a result of COVID. Basically wells that are closer to bringing into service, right? And a lot of those wells have been completed now. The U.S. rig count is up 243 from a year ago, but it ends somewhere. There's not an infinite amount of these wells that are, close to bringing online. And drilling and exploration and getting that oil to the market doesn't happen overnight. It takes years. And that's why the president, even if he said, drill wherever you want, build as many pipelines as you want, that's not going to solve problems today, tomorrow, or this summer, maybe in a few years.
Now, typically gas prices take the elevator up and the stairs down. Coming up, De Haan will explain the reasoning behind the slow decline and why gas station owners shouldn't be to blame. Stay with us.
This is The Weekly on ClickOrlando.com with Justin Warmoth.
Welcome back. Well, you don't need me to tell you, everything is more expensive right now, but gas prices seem to irritate us the most. Analysts say it's a supply and demand problem, and that strong demand isn't going away as millions hit the road for Memorial Day weekend. So what will it take for those prices to come back down? Here's GasBuddy's Patrick De Haan. Prices typically fall in the fall and spring in the spring. Summer blend, when does that affect, that higher price effect from the summer blend? Is that already here, or is that something that we can expect?
No, that is something that's basically been priced in, right? Is that there's a small higher price. Orlando doesn't use the most stringent type of summer gasoline, so there's that. Some areas, bigger cities, Chicago, St. Louis, New York, LA, there's much bigger of a difference, about 25 to 40 cents a gallon between what they use in winter and what they use in summer. Orlando is one of those exceptions that they use a different type of gasoline for the summer, but it's more of a common standard across areas of the U.S. And so, yes, that is something that's priced into what we're paying today. And as you mentioned, I do expect the cyclical nature of gasoline to continue, prices springing forward in the spring and falling in the fall. But the biggest question is also what is going to be going on in the backdrop of that happening. There are certain things that could overpower that decline that we usually see. If there's an escalation between Russia and Ukraine, or if another oil producer goes offline in fall, well, forget about prices going down. So if all things hold normal, we should see some relief in the second half of the summer. Again, subject to hurricane season.
Yeah, which of course starts this week. We've seen quite a number of people reacting or accusing gas station owners of trying to take advantage, or that's what they're claiming, that these gas station owners are trying to take advantage of this market by price gouging. Is that fair?
No, it's not. Just like you may have a hand in what you sell your house for. The underlying value is basically determined by the current supply and demand conditions. Your house is worth much more today because there's, especially in Florida, there's way fewer homes in the market. So suddenly, over the last year and a half, there haven't been as many new homes built for various reasons. And so the value has skyrocketed. I wouldn't say that you're gouging by selling at the market price. There's just people willing to pay that. The same exact things holds true for oil. Back in 2020, when nobody was driving, demand plummeted, and that forced prices to go down. But now the opposite is true. Almost everyone and their mother are driving, and there's not enough supply to keep up with that demand, especially considering that imbalance, right? That kind of artificial factor that Russia invaded Ukraine and we responded by sanctioning Russia. So that's what has really sent the market skyward, is that there's just been a massive tilt in supply and demand. I do expect some improvement, but it's really contingent on when Russia starts, when their oil can get it back to the global market. And keep in mind, it's a lot of countries that are sanctioning Russia's oil.
And it's not, and again, I do want to focus that this is a global thing here. It's not just, your local gas station seeing high gas prices. When we look across the world, really, America has lower gas prices when you look at the conversion rate and everything like that, as opposed to Europe as well, just for some perspective for folks out there.
Yeah, absolutely. The biggest difference is that Europe has a lot more taxes, but the base foundation, the US, we do things really efficiently. We have a lot of energy to make these things like gasoline, diesel, and jet fuel, right? Natural gas is one of the main drivers at refineries. They use a tremendous amount of power. Our electricity is plentiful. It's relatively cheap. You go over to Europe and they use a lot of renewables. So the cost of that electricity to drive refineries is very expensive. So that all goes into what the refinery then sells their products for. But as you mentioned, this is not just a US phenomenon. We are kind of the middle of the road. Many countries are higher, and any countries that are selling gas significantly lower, there still are countries that subsidize that gasoline. Like in Saudi Arabia, the government basically sells it below cost to keep their citizens happy, and because they have a lot of oil they're sitting on.
And traditionally, gas prices take the elevator up and the stairs down, right? So when we see spikes, they happen rather quickly, and then it takes a long time to kind of get back to whatever folks think the market value really should be. I think that we've become accustomed to seeing something in the 2s or low 3s based on living through COVID and seeing what gas prices were for the last couple of years. And so this is more of like sticker shock as opposed to maybe something that is truly in reality of what it should be.
Well, as you mentioned, it's a rock and feather. Prices do shoot up. And I think some of that has to do with psychology. People get very scared at various things. The people that trade oil and commodities, they're humans. And so if you see something completely unexpected and shocking, who would have had at the beginning of the year Russia invading Ukraine? So what happens is oil companies, or I should say traders represented by gas stations, you see an event like that, and the thinking is, wow, I better jump in and buy oil, because what if it's harder to get down the road, and that starts putting prices up, just like the home market, right? People are just throwing in offers. They're doing ridiculous things because they're so desperate. That psychology applies to oil trading as well. That people buy houses home unseen, no inspection. That's the same type of emotional behavior that happens when you see Russia invading Ukraine, and there's going to be repercussions.
Yeah, the price of living and for basic things has gone up across the board. It's not just gas prices, but gas prices seemingly get the most press. And is that because, I don't know, everyone drives, or a lot of folks drive, or B, is it more so that we see the prices change in real time with the big board at local gas stations?
I mean, that's really it, right?
Yeah.
You can't escape it. If you're driving even a mile, those LEDs are just like burning your retina. You can't avoid it, right? It's just very bright. You see it. It's become a barometer for many of us on how we feel, right? Because America loves the automobile, whether it's a Tesla or an internal combustion engine vehicle. That spells freedom to us. And that gas price sign is how we feel about our ability to have that freedom. And when we see prices go up, it feels like we're being restrained. And when prices are down, it feels like we can do anything.
So relief, I do want to touch on this before we let you go. Relief, folks wondering, when will they come down? When will we report on prices coming down more so than going up? Is that something that you think Labor Day we can make a rough estimate on that?
I'll tie it to really one of two major events. Either the economy slows down significantly and we see that, dirty R word recession, because that will greatly reduce demand most likely, or there's some resolution between Russia and Ukraine. And not just a resolution, but a long-standing resolution. Because that's probably the only way that countries will then end those sanctions on Russia's energy and allow that energy to flow to the global market. That's what we need, right? Doesn't matter if it's Russia or if we can suddenly produce a lot more oil overnight. That's what the global market needs to balance and for prices to come down, is we need a lot of oil. Doesn't really matter where we get it. Long-term solutions. And is there something that you believe needs to happen in this country or maybe on the global scale when it comes to oil, gas, and what people pay at the pump? Well, I mean, we're obviously in very unique times, right? We went from COVID, which depressed the economy, to the opposite, right? The economy is just running so fast now. We're trying to slow it down. Really, the only thing that's going to be a permanent cure is time, right? A lot of these imbalances will work their way out. But again, a president, no matter if it's a U.S. president or German or Japanese president, there's nothing you can really do about Russia's aggression against Ukraine. You can discourage it, and that's what we're doing by sanctions, but it's going to take a long time for, either demand to go down or for supply to go up. So we're kind of stuck in this interim until there's a development there. We're going to be stuck paying higher prices. And there's so many supply chain imbalances, right? Even if you wanted to buy an EV right now, you couldn't. So we're just dealing with a confluence of various factors brought on by, circumstances that are well beyond our control. And, could the president approve drilling? Yeah, he could probably let the free market do its thing. But that's not going to solve the problem overnight, right? That's going to solve the problem in a couple of years. Everyone's looking for the overnight solution, and I hate to say it, but there's not a good one. And my thanks to Patrick De Haan for his insight this morning. For more information on the price of gas and the events honoring our nation's heroes, just head to clickorlando.com. I'm Justin Warmoth. Have a great Sunday and a safe Memorial Day weekend.